What's going on, traders, and welcome back to my YouTube channel. My name's Antonio. Most of you might know me on Instagram as Ants Analysis, and I'm bringing you on this journey with me on my YouTube channel to help take your trading to the next level. In this video, I'm going to be breaking down exactly how I use the Fibonacci Retracement tool, my exact settings, and how I use it to execute a trade. If you're not already subscribed, make sure you hit that subscribe button so you don't miss any more content. And as always, if you want to join our community with over 10,000 traders, our Discord is completely free to join and will be linked in the description below. But let's not waste any more time, let's jump straight into the video. Right guys, so here we are on an example of the Fibonacci Retracement, how I would use the tool for when I am trading. So first thing I want to share with you guys is just the Fibonacci tool. The toolbar, here it is, the Fibonacci Retracement tool, as you can see there, Fib Retracement. A lot of you guys on Instagram and on YouTube have requested, what are my actual Fib settings, the settings I use, which I'm going to show you right now. Just draw this out. So you guys can copy this as you wish to use it in your trading. So the levels that I like to use to begin with are obviously the 0 and the 1, and then I have 0.382, I have 0.618, which is the golden zone, I have 0.5, and I have 0.786. All of these are the fib levels that I use within my trading. And if you guys obviously want to just take a screenshot of this, you can see the exact settings that I have, the thickness of the lines, the colors I use. I'll scroll down as well, so you guys can copy all of this for where it says left, top, everything like that. Coordinates, here we go, you can see that, visibility, so you can copy that as well. So that is my exact fib levels and settings that I use, so you guys can copy that and have the exact same settings as me. I know a lot of you requested that, so there you go. Now we're going to talk about, well, how would I actually use the Fibonacci Retracement in my trading? And it's very, very simple. It acts as a confluence, an extra confluence for my trading. Now you can't use the Fibonacci Retracement tool on its own. You need to use other pieces of confluences with it, such as support and resistance levels, trend lines, and market phases, which we'll go into exactly right now. So this is an example on USD CHF on the 30-minute time frame. So just to tell you guys, the time frames that I use this on, well, to be honest, it can be used on any time frames, whether that's the 4 hour, the 1 hour, 15, 30, 5, whatever it is. Price action happens on all time frames, so keep that in mind. I know a lot of you ask me all the time, what's the best time frame to trade? As I've spoken about many times, it doesn't matter. Price action takes place on all time frames. It just depends on what type of trader you are and whether you want to be on high time frames or low time frames. But let's get straight into the analysis and how I would actually use the Fibonacci Retracement tool. So first thing we do is, we identify the trend. And in this example, you can see how we are downtrending, okay? The price is being dominated by sellers. We're moving to the downside. As you can see, we're moving to the downside. We're pulling back. We're creating lower lows, lower highs, and then we're moving to the downside once again. The way I like to use the Fibonacci Retracement tool is off the back of a correction phase. So in trading, the markets like to move in two phases, okay? We have a nice impulsive phase, and then the market will move in a correction, choppy market conditions, to the upside, and then it will follow again by an impulsive move. And likewise, the other way, we'll have our impulse to the upside, and then that will follow by a correction to the downside, and then once again followed by another impulse. And what this is called is really simple: impulse, correction, continuation. That's how we like to trade. Okay, and it's on this correction here where we use our fib levels. We draw our fib from our swing low to our swing high, and then we're looking for the retracement. Okay, and that's what this is, the retracement. That's why it's called the Fibonacci Retracement. Okay, and that's how we would use it. And I'll show you now exactly on the live chart example. So what happens here? As you can see, we have this level of support within the market, which comes back obviously to be used as resistance, which we'll come into in a second. But notice how we've broken this level of support, okay? Keep your attention on this move here. This move is very impulsive, okay? We've broken through this support very impulsively. And then what happens is we move to the upside in a correction, okay? So take your focus here. Notice how these two phases are different, okay? We have a nice impulsive move followed by a correction, okay? And this correction is our retracement. And that's where our Fibonacci Retracement tool comes into place. So how would we draw the Fibonacci Retracement tool? Well, we'd grab the Fibonacci Retracement tool, we'd use it from our swing high. So we'd connect our swing high, we'd click, and then we drag it down and connect to our swing low down here. But obviously we need to drag it across to see our levels. Okay, so that would be our swing low to swing high, okay? And then we have all of our fib retracement levels. So the question is, well, what is the best fib level to use? And that's why you can't use Fibonacci retracement on its own, because you need to line it up with another piece of analysis. And in this instance, we're going to use this level of support. As you can see, we've got 1, 2, 3 touches of support, okay? So a lot of the time in trading, you'll get price will impulse through a support level and it will come back and use it as a resistance, which we have here. And in this instance, we pull back to the 61.8% Fibonacci retracement, which is why this is the strongest level. As you can see, the 38.2 level here, we have come down and we have retested it. But why didn't we use this as our level to come to the downside? Well, that's because it doesn't line up with anything else in the market. There's no extra confluence to go along with it. It can't be used on its own. Same as the 50, same as the 78.6. There's nothing really telling us, but the 61.8 lines up with this level of support, which is why we have this double top here. And that's why let's get rid of all our other levels. Let's close this down. Let's close down 0.382. Let's tick off 0.5. Let's click off 0.786. And you can see that that is the clearest it goes. 61.8%, also known as the golden level, would be used in this scenario, okay? Because we're lining it up with another piece of confluence. So now, how else would we use the Fibonacci retracement? Well, I actually use it sometimes to put my stop loss above. So I would enter my trade off of the 61.8 and I would put my stops above the 78.6. Why? Because that's just in case, worst case scenario, we don't use the 61.8. We might come up and use the 78.6 just as worst case scenario. So we'll pick just clear of it just in case. And then we would enter our trade there, and that would be our stop loss. Targets, we can put down here. Let's say we'll put it at the bottom of that support. In this instance, we target there. It's a nice 1 to 3 risk to reward. Let's just play it out and see what happens with this particular trade. Straight away, we get a nice movement to the downside. Okay, straight away breaking through our take profit. So in this instance, this is where the 61.8 and the Fibonacci retracement would be used. Stops above the next level, and make sure we're using it in line with another piece of confluence. So this is the first example on USD CHF on a 30-minute. I will break down another example right now. So I briefly want to touch on what are confluences in trading. A confluence in trading means having multiple factors or signals that lead to the same trading opportunity. A confluence could be anything: a support and resistance level, a Fibonacci level, trend lines, or any piece of technical or fundamental analysis. And by looking for confluences, traders try to increase the likelihood of making a successful trade. Stacking confluences provides stronger confirmation and confidence in your trading decision making. And technically speaking, the more confluences you have, the stronger the trade. However, you don't want to overload your charts and cause analysis paralysis. This can delay your trading decisions. And remember, whether you have 100 confluences or 1 confluence, your trade can still lose and profits are never promised. I suggest having a simple approach and having just 3 or 4 confluences to make your trade. Remember, all you need is a slight edge in the market, and to trust that edge alongside a systematic and emotionless mindset over a long period of time. Okay guys, so this is the second example. This is now on Great British Pound USD, so GBP USD, and this is on the 15-minute time frame. So just going to show how you can use any time frame that you want and it works on any given time frame. So I'm going to show you exactly how I would use the Fibonacci retracement tool in this example. So for starters, just to make you guys aware, GBP USD in this instance is uptrending on the higher time frames, so we are bullish. But looking at price action right now, well, what can we see going on? We can see, if I just connect this, price is trading within this descending channel. But it looks like price is going to break out of it. Why? Because the phases of the market have switched. We have this nice support level down here where price has used it. And then from this support level, we can see how price has moved impulsively to the upside. Okay, so remember, we're looking at phases of the market. Okay, so that's a nice impulsive move. And then if I get rid of this and I show you the next phase, you can see how we move to the downside in a corrective manner. Okay, notice the difference. We have a nice strong impulsive move to the upside, and then we have a nice correction to the downside. So what do? We get out our Fibonacci retracement tool. We'll do it from down here, swing low this time to swing high, and we'll put on all of our other levels to begin with that we have. And now we're looking at, well, where is the best place for price to pull back to? So we're looking at all these levels. So 38.2, there's not much going on. 50%, again, there's nothing really going on in the market. Now the 61.8, well, what does this line up with, in my opinion? If we just drag from here to the 61.8, we can start to see a potential inverse head and shoulders pattern forming. Okay, so this is our added confluence. So remember how last time, on the last example, we had the added confluence was the break of support to be used as resistance. In this instance, the added confluence is a inverse head and shoulders. Okay, so we have this level here, left shoulder, head, right shoulder. That's our added confluence. But where does the fib line up? The fib gives us our added confluence with the 61.8 also lining up with this zone. So we'll get rid of the 78.6 and the 5 and the 0.382, and we can clean that up a bit, and we can see, look, the 61.8 is the best level. So that's where we want to be entering the market. Where do we want to be putting our stop losses? Again, we can use the next fib level to the downside, which is the 78.6. If you're struggling with where to put your stop loss. So we'll grab our long position, and let's say we're entering the market on the 61.8. We'll put our stops below the 78.6. And let's say for this instance, we'll target the start of the downtrend. This is where I would like to target with this trade, would be the start of the downtrend. That is where we want to be targeting. So this instance, we have a nice risk to reward of 1 to 6, and we'll play it out and we'll see what happens. Okay, nice move to the upside there. Okay, that's basically it with the Fibonacci retracement. Just to go over key points, the Fibonacci retracement tool shouldn't be used on its own. Make sure you're combining it with other confluences. Keep it simple. Don't try to use too many confluences. You know, keep it to 2, 3, 4 maximum. In this instance, you know, we've got the inverse head and shoulders along with the 61.8. Remember, we always like to do it off of the impulsive move followed by the correction, and then we look to catch the continuation. With this trade, that's exactly it. Make sure you have a positive risk to reward. Make sure you're using correct position sizing. Make sure, you know, you're risking 1-2% of your account per trade, and you're not over leveraging your account. And remember, this strategy doesn't always work, okay? It's a powerful strategy. It's a powerful, the Fibonacci retracement tool is very powerful, but it won't work every time. But when it does work, you know, you get these positive risk to rewards. So for example, here, this is a 1 to 6, which means, you know, you could have this trade and then you could lose 5 trades after in a row and you'd still be in profit. Okay, so don't feel like this strategy is bulletproof. You're not going to win every trade. In fact, you might lose more trades than you win, but, you know, use this Fibonacci retracement tool over a long period of time. You should see, you know, your profits generate, and you should see yourself improve in trading. But yeah, that's about it, guys, with the Fibonacci retracement tool examples. I hope that was a good breakdown for you guys, and we'll go into the outro. So that's the end of the video, guys. If you liked it, make sure to leave a like and a comment. Let me know your thoughts. And remember, the link to our free Discord, where we go live 3 times a week, will be in the description below. Thanks for watching, and I'll see you in the next video.